Grazie per questa presenza, ringrazio Mr. Hill che ho già avuto modo di ringraziare ieri sera, ringrazio tutti gli altri ospiti che sono presenti e che interverranno durante la giornata odierna. La Federazione Banca, Assicurazione e Finanza è un'organizzazione che vuole definirsi la casa comune del risparmio della finanza italiana. Sono associati alla Federazione l'ABI, l'ANIA, Assogestioni, l'Associazione dei Fondi di Investimento, l'Asso Fiduciaria, l'Asso Immobiliare, l'Asso Previdenza, l'Asso SIM, cioè le principali rappresentanze di imprese che operano in questi settori. Il tema di oggi è molto centrato, è molto definito e dobbiamo trovare il modo di riflettere per far fare dei passi avanti al dibattito su questo obiettivo. Sappiamo tutti che le riforme strutturali per migliorare le condizioni di investimento in Europa sono state attuate troppo lentamente. Sappiamo tutti che dopo 6 anni di crisi economica il livello degli investimenti nell'Unione è sceso del 17% rispetto a quello del 2008. Sappiamo tutti che l'Europa ha bisogno di convergenze politiche sia sul piano industriale che sul piano energetico e climatico. Sappiamo tutti che la partecipazione dell'industria europea al valore aggiunto industriale è diminuita su scala mondiale del 5% nel periodo 2000-2012. In Italia è diminuito del 28%. Sappiamo tutti purtroppo che l'Europa ha perso 6 milioni di posti di lavoro nell'industria. Sappiamo che questo problema di competitività dell'Europa deve essere risolto in tempi rapidi e in modo forte e quindi da qui ne deriva che dobbiamo essere ambiziosi negli obiettivi dei prossimi anni. Non possiamo accontentarci di un lento recupero. Noi ci siamo trovati qui oggi perché spingiamo molto come Federazione Banche, Assicurazioni e Finanza per far ripartire gli investimenti pubblici e privati sia in Italia sia nel mercato europeo, soprattutto con politiche di attenzione alle piccole imprese che in questo momento sono schiacciate sia sul piano del credito che sul piano della capacità di investimento. Pensiamo che la partnership pubblico-privato possa essere una risposta di metodo, ma accanto a una risposta di metodo c'è bisogno anche di una risposta di dimensione, di quantità. Le infrastrutture, sia quelle fisse, che una volta definivamo pesanti, sia quelle di network, le utilities, sia quelle sociali, sono e devono essere l'asse portante della crescita. Gli investimenti in ricerca e sviluppo, infrastrutture innovative, green economy e smart cities sono la chiave per tornare a crescere e dobbiamo fare in modo che questo diventi un pensiero comune in Europa. Dobbiamo evitare che accanto agli hashtag che usiamo per comunicare tramite la rete non ci siano progetti eseguibili, finanziabili, realizzabili. Questa riflessione di oggi arriva al momento giusto perché abbiamo avuto recentemente la presentazione delle linee generali del piano Juncker, su cui penso che poi il commissario Hill ci intratterà. Ci sembra un piano ben impostato sulle linee generali. Si fonda su più pilastri, il Fondo europeo per gli investimenti strategici, un sistema di servizi reali e una riforma in profondità del quadro regolamentare e legislativo sugli investimenti nella direzione del mercato unico e dell'integrazione dei mercati. È orientato verso il mercato e verso gli investimenti finanziabili sul mercato e quindi minimizza il rischio di cattedrali nel deserto. Dà un ruolo importante alla finanza e alla capacità di valutare i singoli progetti con un meccanismo di moltiplicazione e mobilitazione delle risorse. È ispirato al principio di sussidiarietà, sia orizzontale che verticale, perché il pubblico non spiazza il mercato, ma con le garanzie si assume rischi che il settore privato non sarebbe in grado di assumersi. Quindi sul piano della filosofia, sul piano degli obiettivi, sul piano dell'impostazione, il piano Juncker non può che meritare e deve meritare tutta la nostra attenzione. Però dobbiamo sapere che l'unico problema, che è un problema drammaticamente rilevante, è che trattandosi di un piano strutturale destinato a produrre i risultati solo nel medio-lungo termine, mentre l'economia ha problemi di aspettative e crisi di fiducia in cui avrebbe bisogno di segnali e stimoli da domanda immediati, temporanei, sufficienti e credibili. Come possiamo superare questo limite del piano Juncker? Dobbiamo sforzarci tutti di fare leva su un'applicazione intelligente della clausola di flessibilità che consenta ai singoli Paesi interessati di finanziare il Fondo europeo. Gli Stati membri potrebbero, in modo volontaristico, trasferire risorse al Fondo non solo per estendere le garanzie agli investimenti europei, ma anche per finanziare un più ampio programma ciclico di incentivi agli investimenti privati in misura equivalente da effettuare nel Paese medesimo, sotto forma di riduzione d'imposta. Insomma, un credito d'imposta sugli investimenti. Lo Stato membro, nella nostra ipotesi, trasferisce al Fondo risorse equivalenti a un programma di tagli di imposte a sostegno degli investimenti, si accolla il relativo indebitamento, ma questo non gli viene conteggiato ai fini dei parametri di Maastricht, essendo investimenti validati a livello europeo. Il Fondo gestisce i criteri, decide i criteri e gestisce e controlla il programma. L'obiettivo è quindi di poter utilizzare il Fondo come soggetto promotore di investimenti nei Paesi che hanno più bisogno di nuovi investimenti, utilizzando risorse finanziarie di questi singoli investimenti e quindi non facendo fattor comune di un debito aggiuntivo, ma neutralizzando queste risorse ai fini dei calcoli dei parametri, proprio perché la validazione arriva a livello europeo. Accanto a questo strumento di implementazione del Fondo potremmo individuare un secondo strumento di implementazione del Fondo, e cioè che ciascun Paese destini una quota dei fondi strutturali europei di propria pertinenza ad essere allocata nel Fondo e quindi tramite il Fondo a essere investiti nel Paese interessato senza l'obbligo del cofinanziamento. Questa doppia operazione, fondi volontariamente apportati e ribaltati nel Paese di provenienza e fondi già appostati nel bilancio europeo, fondi strutturali, che tramite il Fondo bypassano l'obbligo del cofinanziamento statale, potrebbero di fatto implementare il livello di investimenti nei Paesi che hanno bisogno di maggiore spinta in modo significativo. Accanto a questi due strumenti, la terza osservazione che noi facciamo è utilizzare parte delle risorse, di queste risorse, per finalizzarle a un fondo di garanzia universale per le piccole imprese secondo l'accezione europea. Noi pensiamo che il tema del finanziamento alle piccole imprese non sia un tema congiunturale figlio della recessione, ma sia un tema strutturale figlio della globalizzazione, di cui la recessione ha moltiplicato gli effetti. Questo fondo è oggetto di un lavoro comune che insieme all'amico Franco Bassanini stiamo facendo in sede di Federazione Banca, Assicurazione e Finanza, e su questo fondo potrebbero essere veicolate risorse aggiuntive a valere sempre del piano allargato del progetto Juncker, in modo tale da ottimizzare l'uso di queste risorse per il credito alle piccole imprese. Piccole imprese, io non uso la parola piccole e medie imprese, perché le piccole imprese e le medie imprese sono due mondi diversi oggi. Le medie imprese sono più vicine alle grandi, le piccole imprese sono in un imbuto che corre il rischio di farle attirare verso il basso. Quindi, in conclusione, la nostra federazione pensa che un dibattito su queste 3 proposte, partecipazione volontaria aggiuntiva di fondi nazionali che tramite il fondo vengano ribaltati secondo logiche di investimento europee nel paese di provenienza e siano escluse dal calcolo dei parametri. Secondo, utilizzo di quote di fondi strutturali già appostati che tramite il fondo vengano esclusi dall'obbligo di cofinanziamento e utilizzo di parte di queste risorse per fare un fondo di garanzia universale e obbligatorio per il finanziamento delle piccole imprese in Europa e auspicabilmente, ma in Italia necessariamente, vista l'importanza che hanno le piccole imprese da noi, sono i 3 addendum che vorremmo che venissero presi in considerazione per implementare il piano Juncker e farlo diventare non solo un buon progetto, ma un elemento fattivo di sviluppo. All'interno di questo, ovviamente, questo sta dentro al discorso più generale su cui siamo tutti quanti impegnati e che penso che qui non serva spiegare, lo ricordo solo per memoria. Concludere il prima possibile l'iter del mercato unico dei capitali. Questo è un interesse di tutti. Rimuovere ostacoli e barriere ai principali settori delle infrastrutture di interesse europeo. Terzo, creare un quadro normativo unico, semplice, chiaro e stabile. Noi siamo a favore di tutto quello che semplifica. Non abbiamo il problema di difendere la nostra soggettività. Abbiamo il problema di non aggiungere una norma europea a una norma nazionale, oppure una norma nazionale a una norma europea. Ci fidiamo della norma europea, ma la norma europea deve essere applicabile e deve essere sostitutiva di quella nazionale, non può essere aggiuntiva né in peius né in meglio, perché altrimenti questo significa solo complicazione. E poi non possiamo prendercela soltanto con le burocrazie, che di natura complicano, ma che se hanno delle norme di difficile applicazione sono obbligate a complicare. Quindi l'obiettivo è evitare la doppia regolamentazione, una regolamentazione unica a livello europeo, armonizzata, chiara e funzionale all'obiettivo degli investimenti. Su questa linea le partnership pubblico-privato hanno oggi un grande spazio di sviluppo ed è questo il grande, secondo me, messaggio del piano Juncker. Il piano Juncker, con il meccanismo dei sistemi di garanzia e con il meccanismo della leva, dà implicitamente un messaggio che è un messaggio di solidarietà e di coesione. Per far ripartire l'Europa serve insieme più pubblico e più privato, più Stato e più mercato. Questa è una vecchia cultura di alcuni di noi, spero di molti di noi, ed è oggi purtroppo una unica grande soluzione alle nostre necessità, altrimenti non ci rammarichiamo se l'Europa piano piano viene marginalizzata e allora le nostre convegni, le nostre conferenze, le nostre riflessioni rimarranno, come dire, un grido di speranza o di rammarico che comunque non cambierà la vita delle nostre imprese, dei nostri concittadini, delle nostre realtà. La Federazione Banca, Assicurazione e Finanza, con questa iniziativa di oggi, con una maggiore presenza a Bruxelles che noi abbiamo strutturato in modo permanente in nome e per conto sia delle banche che delle assicurazioni che delle altre realtà a noi associate, vuole dire questo: la finanza non è così egoistica come delle volte leggiamo sui giornali. La finanza può essere molto più utile e molto più altruistica rispetto a quello che normalmente il comune sentire sente, ma per fare questo deve pensare non solo alle regole di funzionamento dei singoli settori, la banca, l'assicurazione, il mercato dei capitali, ma deve pensare di più alla politica economica di sviluppo. La Federazione nasce per questo, per avere un occhio alla politica di sviluppo. Le politiche economiche sono, quando facevo un altro mestiere, competitivo con quello di rappresentante della finanza, facevo il presidente degli industriali italiani 20 anni or sono, dicevo che la migliore politica industriale è una buona politica economica. Ne ero convinto allora, ne sono convinto anche oggi, facciamo una buona politica economica e cerchiamo di concorrere a raggiungere questo risultato. Grazie.
The second introductory address is by Rintaro Tamaki, the Deputy Secretary General of the OECD. We have organized this conference with the OECD, and I take this opportunity to thank him, and through him, his colleagues, for their partnership.
Senor Abete, distinguished delegates, distinguished guests, ladies and gentlemen, very good morning. I'm very happy with you today, with such an impressive setting and blue skies we are missing in Paris. And this event covering an important subject in charting the economic future of Europe. I'd like to thank our co-organizers, including the Club of Long-Term Investment, and it is a long-standing OECD partner for their sterling work. But before presenting the OECD's latest work in this area, let me take a moment to explain why long-term investment is so fundamental to the pursuit of stronger, greener, and fairer growth. It is now 6 years after the global financial crisis, and yet a robust recovery still seems too distant. Global growth is uneven and sometimes halting, and unemployment is stubbornly high in some regions, particularly in Europe. Here in Europe, low growth forecast and the spectrum of deflation cast a long shadow, while new global risks gather on the horizon. The build-up of debt in emerging economies, the return to bullish risk-taking in global financial markets, and rising geopolitical tensions. Responsible macroeconomic policy, accommodative monetary policy, monetary easing, and fiscal consolidation, they have all borne quite important fruit. But there are now fewer arrows left in the quiver of Keynesian economic policy to stimulate growth. Now it's time to focus on a strong recovery. What is perhaps the brightest spot for the future is investment. A light that has the potential to guide the European countries, Eurozone particularly, back to prosperity. The enabling environment for long-term investment requires improvement, as investor confidence may be hampered even when necessary financing is available. The OECD's indicators, FDI Regulator Restrictiveness Index indicates, for instance, the ownership restrictions on foreign investment in utilities sector, such as energy and transportation, which are particularly well suited to long-term investment, remain high. The restriction remains high in most OECD countries. More could also be done to level the playing field between state-owned enterprise and private investors in terms of their ability to seize investment opportunities. Ongoing delays and uncertainty surrounding the international trade and investment agenda, it may be impending investment as well. Mega treaties such as TTIP could enhance trade and investment liberalization, but a certain current criticism on investor-state dispute settlement are delaying the conclusion of the agreement, adding more uncertainties to an already volatile environment. We consider investment to be very backbone of the economy and critical ingredient for growth. Infrastructure is, among them, a prime example. Yet global flows of foreign direct investment remains 40% below the pre-crisis level. The impact of smart investment goes beyond the economy. Investing in infrastructure, especially social infrastructure, can connect communities, helping strengthen society and the sense that economic system works for people. The announcement of Juncker plan, already Senor Abete just talked about, and we will certainly hear more about today. The Juncker plan announcement is a type of initiative that is needed to breathe life into the Eurozone economy and to improve competitiveness. Furthermore, promoting an agenda of green investment can underpin the needed transition to lower carbon economies. So the returns are not only financial, but also economic, social, and environmental also. Ultimately, we need to see comeback in both domestic and cross-border long-term investment. It was if we are to see a sustainable and durable economy, durable recovery. Now let me share with you some of our views and some of our recent work with the G20 on long-term investment. The G20's Brisbane Summit, it creates action plan just launched a few weeks ago. The action plan stressed the need to mobilize long-term investment by institutional investors who have over $92 trillion in assets under management in the OECD area. This amount, $92 trillion, this amount to a staggering twice, 2.0 times the size of the OECD economy. Investors, institutional investors' asset under their management is twice the size of the OECD economy, up from 1.4 times 12 years ago. Despite the large growth in institutional investors' assets, there are numerous barriers to long-term investment. Based on a recent OECD survey of large pension funds, you will hear more about it today. But regulatory uncertainty is a top concern to them. Regulatory uncertainty is a top concern to institutional investors. They also have to negotiate an often difficult and unpredictable business climate, a lack of profitable and bankable projects or appropriate financial vehicles, and an information gap, matching investment with investors that align the interests of both parties. Last year, G20 leaders endorsed OECD high-level principle on long-term investment financing by institutional investors. You may find this pamphlet downstairs. This year, the OECD has moved hand-in-hand with the G20 economies from solutions to actions to operationalize this high-level principle, developing effective approach to the principle and a voluntary checklist to assist governments in self-assessing their support schemes for long-term investment finance in their own country. This work to contribute in 2015, next year, is supporting the new global infrastructure hub launched at the G20 Brisbane Summit as well. Going forward, the OECD will prioritize policy efforts to support capital market development as a means of unlocking pools of alternative, non-bank sources of finance for long-term investment. We shouldn't lose sight, however, of the still important role of banks in financing growth. Traditional sources of credit are still repairing their balance sheet after the financial crisis, while more stringent lending standards can also constrain credit, particularly for small, medium-sized enterprises. We need to get the balance right between traditional sources of financing and new source, institutional investors. Next year, the OECD will work with the Turkish G20 presidency to deepen and broaden the analysis on long-term investment financing. This work, next year work, will include a comprehensive taxonomy for infrastructure financing that covers the wide range of both financing options and risk mitigation methods. The OECD also stands ready to work with the G20 Turkish presidency on developing indicators on the enabling environment for long-term investment. This can build on the critical mass of our country experience that the OECD has gathered in applying its policy framework for investment, PFI, since 2007, to be presented to you tomorrow. On infrastructure investment in particular, this wealth of experience has led the G20 to request that the OECD to elaborate, together with other MDBs, to elaborate indicators to help countries further mobilize infrastructure investment through domestic policy reforms. In Brisbane, the G20 leaders were also clear in calling for better network for shaping ideas. To this end, the OECD continued to work closely with the private sector, notably with institutional investors, and has just launched a large and growing network of investors, including the Club of LTI and the Casa Depositi and the Prestiti as part of the OECD long-term investment project. Ladies and gentlemen, if we are to turn high-level principle into tangible results, we need to forge a close partnership with an institutional investor community while advancing the long-term investment agenda with governments. This conference provides an excellent opportunity for us to work together to address the challenge we are facing today. I expect very good discussion for today and tomorrow. Thank you very much.
Thank you very much. Before moving on with the program, a couple of announcements. Well, first of all, our welcome is also on behalf of the other institutions that have worked with us in organizing this conference. Let me mention them: Long-Term Investors Club, Cassa Depositi e Prestiti, the European Association of Long-Term Investors, the Official Monetary and Financial Institutions Forum, Integrate, the Consiglio Italiano del Movimento Europeo, and we are also grateful to the Italian presidency of the Council of the European Union, under whose auspices we are holding this conference. Mr. Gualtieri, Roberto Gualtieri, who is the president of ECON committee at the European Parliament, unfortunately is ill, so he's not able to be with us, so we wish him a quick recovery. We have a message from Mr. Martin Schulz, the president of the European Parliament, and I think we have tabled this message, but let me read a part of this message because I think it gives us important ideas to work on this couple of days. Ladies and gentlemen, I'm very sorry that I cannot attend the opening of your conference today. Investment will be the key word which defines the coming years, and for this reason, all tools enabling this deserve the highest political support. The dramatically large investment gap in the EU as a result of the crisis requires all actors to work on all available fronts to get investment going again. I am pleased that EU legislators are not sitting on their hands. Just some days ago, European Parliament negotiators and the Italian presidency reached an agreement on legislation to enable European long-term investment funds. In the coming days, the European Parliament will ratify this deal during its plenary sitting. These funds have the potential to be an important component of a wider strategy to stimulate investment in the EU. They will greatly improve the ability for savings in one EU country to be constructively invested in another, thus reducing an obstacle which proves very problematic for a wholesale recovery of the EU economies. Much still lies ahead of us, but the good news is that we have some clear, tangible goals to aim for. First of all, we must urgently ensure that the European Fund for Strategic Investment is set up in the best way and that all actors shoulder their responsibilities to develop projects which are attractive to private investors. Another key goal will be the successful establishment of a capital markets union. President Juncker's investment plan can certainly provide a helping hand to large projects, but there are countless investment opportunities which go missing and unearned on a daily basis and which could benefit greatly from a union where capital could move more freely. A capital markets union can reduce the obstacles for even the small and medium enterprises to obtain the finance it needs to develop its great idea. This is just a broad brush stroke. Look at what we need to do and where we need to be going over the coming years. I wish you a very successful conference, and I'm sure that its results will provide useful pointers for the concrete work ahead. President Martin Schulz. With this remark, I think we have concluded this introductory part, and we can now move on to the keynote address of Lord Jonathan Hill. And it's my great pleasure and privilege to welcome Lord Hill here this morning. We understand Mr. Hill has a very busy schedule, almost mission impossible, and has intense work ahead and challenging tasks. And so we really appreciate that he has come here to Rome. We also understand this is one of his first trips to the capitals, and we are honored that he has been able to come to Rome. Without much ado, I would like to ask him to come to the podium and deliver his keynote address. But from the start, I want to tell him on behalf of the Italian community that we stand ready to work closely with him to support him in the challenges ahead. Thank you, Lord Hill, and please, you have the floor.
Well, good morning, ladies and gentlemen. Thank you for that kind and warm welcome, and I look forward very much to working with you. I'm sorry I'm not going to be able to stay for as long today as I would like, but this is an important conference, and I will look forward to hearing its conclusions. And I was very keen to be here, and I'd like to start by thanking Luigi Abete and Mr. Tamaki and Mr. Bassanini for organising this conference and for giving us the opportunity to come here together. Near my home, outside the cathedral city of Salisbury, there is a long, straight road, cutting straight as an arrow through the English countryside. And as I drive along that road, sometimes I'm tempted to say as I speed along that road because it's so straight and narrow, but to speed would be illegal, so I don't. I sometimes think of the centurions who tramped its length and the traders who followed in their wake. Roman infrastructure was built to last. An early example of investment in long-term Europe that is still benefiting people in my country nearly 20 centuries later. Now, my ambition today is more modest than the Romans. How could it not be? But I do want to speak about how we can get investment flowing again in Europe, bringing in its wake the jobs and the growth that we all need. Now, this conference today is one of the last to take place under the auspices of the Italian presidency. So on behalf of the Commission, I'd like to express my thanks and congratulations to Pier Carlo Paduan in particular, and thanks to his efforts and those of Roberto Gualtieri, who sadly can't be here today as we've heard. We've made progress in a number of important areas. We've brought negotiations on European long-term investment funds to a successful conclusion, and earlier this week we put in place another important building block of the banking union, relating to the contributions to the Resolution Fund. So thank you for the efforts that you've put into these sometimes difficult negotiations, and congratulations to Italy for running such a successful presidency. Now, I wanted to start by giving you a sense of the new European Commission. Above all, we want to be a political Commission and to pursue a clear set of priorities. President Juncker wants the Commission to be big on the big things and small on the small things. and I couldn't agree more with him on that. We're driven by a sense of urgency, which itself stems from the scale of the challenges we face. President Juncker has talked of the EU being in the last chance saloon. And as I see it, the EU faces two great challenges: the democratic challenge and the economic challenge. In last May's elections, the proportion of citizens who voted fell in 18 out of 28 member states, and none of us can feel comfortable about that. And the economic challenge, as we've already heard, is also extremely pressing. Competitiveness has declined in various parts of the Union. 12% of our workers are unemployed, and in Italy we've got 40% of young people without a job. So delivering on our commitment to jobs and growth is not only vital for individual companies and for workers, it's essential to rebuild trust, both here in Italy and in the EU as a whole. And I think that explains why President Juncker has set such a fast pace. The new Commission is just over 5 weeks old, but we've already launched our investment plan, and we're about to agree our work programme for 2015. This will show how we're going to focus our efforts and concentrate on our top political priorities for the European Union and the European citizens. And of these, one stands out above all others, and that's jobs and growth. And that, of course, brings me to the 315 billion euro investment plan. It's built on three elements, and the first of these is the new European Fund for Strategic Investments. Its job will be to mobilize investment finance without creating new public debt. We know there's no shortage of private funding, but that money is not making its way to the rest of the economy. So the purpose of the fund is to take away some of the risk in investing in long-term projects and thereby to encourage private investors. Kick-started with 21 billion euros of funding, we believe that it should be possible to leverage in private sector investment on a scale that takes the value of the fund to 315 billion euros, thanks to the credit protection offered to the fund via the EIB. Now that leverage ratio, by the way, is less than the 1:18 ratio that the EIB's 2013 capital increase achieved, and the 1:20 ratio delivered by the loan guarantee facility for SMEs under the COSME programme. But for the investment to flow, it will need to be supported by the second leg of the pillar, a credible project pipeline, backed by technical assistance to link investment with mature, growth-generating projects in key areas like energy, telecoms, transport, services, and research. Things like rolling out broadband to help support small business in rural areas, improving energy networks in areas that suffer supply shortages, or creating transport infrastructure to get people and goods to where they're needed most. The selection of the projects to be funded cannot become a political football in each member state for the inclusion of pet projects. The criteria of added value and viability will have to be applied rigorously. This should work in Italy's favour, with your important SME sector and your strong history of manufacturing excellence. The fundamentals are there, and the investment plan will provide an opportunity to remove remaining barriers to investment and growth in Italy and spur the recovery that I know you need so much. The third of the three pillars is to remove red tape, regulatory bottlenecks, and other barriers to investment. And this could have the greatest long-term benefit for the European economy. It will mean moving barriers to entry to certain sectors and making the single market work better. Our service companies, our professions, our digital sector, our investors, inventors and creators all need one thing we've promised them for decades: a genuine single market of hundreds of millions of people in which they can offer their talent, their goods and services, their ideas and their inventions. And beyond our borders, we can offer new trading opportunities. For example, in the USA, once we get TTIP properly explained and fully in place. Jobs and growth will come from the single market and from trade, not from politicians. And our job is to provide the right conditions for the economy to get moving again. So how will I, as Commissioner for Financial Stability, Financial Services and Capital Markets Union, support these Commission priorities? First, I will be looking at everything I do through the prism of jobs and growth. The past few years have seen a great swathe of new rules being introduced to govern the financial sector. These were necessary to help respond to the financial crisis and to help restore financial stability. And financial stability is the first part of my job title. But right now, I think we face another threat to financial stability, and that threat is a lack of growth. There is no growth without financial stability, but there is no financial stability without growth. So looking ahead, I do not anticipate that we will need anything like the same volume of new rules in future. Some people are urging me to have a bonfire of existing legislation. To them I say that there can be no going back. But I do want to look at the cumulative effects of the legislation we have passed. And I do not think that we should be afraid to look at regulation again if we find that we have not always got the balance right between managing risk and encouraging growth. Now, one of the key tasks I've been given is to help build a capital markets union so that money can flow through the EU to where it can be most productive. And I see this as a classic single market project, a project for all 28 member states. My ambition is to help unlock the capital around Europe that is currently frozen and put it to work in support of Europe's businesses and particularly Europe's SMEs. I think a couple of figures make the point. We in Europe save lots of money, 2.7 trillion euros worth, which is 1/3 more than in the United States. But mid-sized companies in the US have roughly 5 times as much funding from capital markets as their counterparts in the EU. EU businesses get about 80% of their financing from banks and 20% from debt securities. In the US, depending on which set of statistics you look at or which statisticians you're talking to, the ratios are broadly speaking the other way round. Now, at the moment, small business owners here in Italy who want to expand their business are likely to turn to friends or family or to the local bank. And I want them to have the confidence to explore other options and to have better access to capital markets. And this could be achieved through worthwhile private initiatives. The so-called elite project of the London Stock Exchange, the Borsa Italiana group, is one such example. But there are others. Perhaps the Italian small business owner could list their business on an SME growth market, giving access to investors anywhere within the EU. Why should we not think of attracting in professional investors like venture capitalists or private equity funds? Because more than 50 years after the Treaty of Rome, we still don't have free movement of capital. Shareholders and buyers of corporate debt rarely go beyond their national borders when they invest, and savings are essentially compartmentalized in member states and are very highly concentrated in the banking system. This is holding back the size and depth of capital markets, making it difficult for investors to diversify. Now, there are a number of obvious reasons for this fragmentation. There are differing rules, documentation, and market practices for products like securitized instruments and private placements. There's the tax element, with a bias in favor of both corporate debt and mortgage debt, the national nature of insolvency law, and investors don't have access to comparable information on smaller businesses to assess the risk of investing across countries. But I think there will be other issues that we'll need to unpick. And that's why I'll be launching a broad public consultation early in the new year. I want to approach this challenge from the bottom up, identifying problems sector by sector, country by country, and then working out how we can remedy them. And I will listen to everyone who wants to contribute: parliamentarians, member states, individuals, consumer groups, and of course, the financial sector and its customers. Above all, I want to hear opinions from all 28 member states, because this must be a project for all 28. And once we have this input, we'll come forward with an action plan in the middle of next year. But we can already see some priorities for action. A good example is the development of European long-term investment funds. These are designed for investors who want to put their money behind projects and companies that need long-term finance. Until now, those projects might not have been able to raise money on the stock markets or to get lending from the bank. Now they'll have a new option. LTIFs should make it possible to increase the funding available for infrastructure, other long-term projects, and for SMEs across the EU. And I think they should be particularly attractive to investors such as insurance companies and pension funds that need stable, steady income streams or long-term capital growth. Perhaps they can help trigger a whole culture change and become the go-to instrument for long-term, stable, debt-encouraging long-term investment in other categories of investor too. Another area of work that is developing fast is that of high-quality securitization. Simple, transparent, and sound securitization instruments where issuers retain part of the risk and investors know what they're investing in could certainly help improve financing conditions. Securitization markets have fallen sharply since their pre-crisis peak, with issuance of simple asset-backed security products in 2013 reaching less than half of the 2007 level. If these markets were revived with high-quality securitizations to take us only halfway back to the pre-crisis peak, that could be equivalent to between 30 and 70 billion euros of additional funding, and it could help free up bank balance sheets for lending. Now, although this isn't some kind of silver bullet, it could help form a bridge between banks and capital markets and allow banks to trim their balance sheets and free up capital for lending. It could help offer investors good products with reasonable yields. But if securitized instruments are going to be trusted, we have to specify clear criteria and levels of transparency and frame the new system in a way that is sound and understandable for investors. The Commission has recently adopted specific rules that apply to the insurance and the banking sectors to help promote high-quality securitization. And these, I think, are the first steps towards a wider EU framework that I hope we can develop, building on work already underway in the EU, such as in the European Central Bank and the Bank of England, as well as globally. We're also exploring a number of other avenues to getting the Capital Markets Union going, from looking at how we treat covered bonds in our legislation to examine how our private placement markets compare against their international competitors. And if we could increase annual issuance via private placement markets in Europe by just half, that would be equivalent to about 5 to 10 billion euros of additional financing opportunities a year. I'm also going to bring forward a review of the Prospectus Directive with a view to lifting unnecessary administrative burdens on companies that want to raise capital across the EU, and I'll be looking in particular again at small and medium-sized businesses and the burdens on them. And longer term, I want to think of ways to give greater access to SME credit information to encourage investment from a wider pool of investors. Creating the Capital Markets Union will be a multidisciplinary, cross-sectoral project, one that will need the support of everyone, from institutional investors to small businesses, from legislators to banks. I believe it will be an essential building block in helping to get Europe back to work. And I hope very much, therefore, I can rely on the support of the people here from the financial services industry and from other parts of the economy and society. In my mandate, I also want to look at retail issues. In recent years, on the back of the financial crisis, the Commission, rightly, focused on the wholesale systemic side. Now I think it's a good time to turn the telescope round and to look at financial services from the perspective of the consumer and the retail investor. I'll be meeting a group of consumer representatives later on today, and I'll listen to what they expect from a well-regulated financial sector. But I think we have to work untiringly to create a single market for small companies and individual consumers. So for me, the Capital Markets Union is one example of how the financial sector can act as part of the economic mainstream, supporting companies and encouraging growth. Financial services must be the oil in the machine, and financial service firms should adhere to the highest possible standards of behavior. For me, this is not the same as mere compliance with the rules. The culture of how a business behaves is what is most important, not a box-ticking mentality. If together we can achieve that, if we can build a new culture of compliance with the spirit as well as the letter of the law, then I will be the champion of that well-regulated financial services industry, and I will defend the contribution that it makes to growth and to jobs. Ladies and gentlemen, the scale of the economic challenge that we face and the damage that Europe suffered in the crisis is daunting. So now, and today's conference reminds us, we have to focus on delivering real change. As well as being taught about Roman roads and Roman baths when I was at school, English people of my age were also taught that Rome was not built in a day. Constructing the right framework for long-term investment will not be done in a day either. But I'm confident that in the years ahead, we can put down some strong foundations. And by we, I mean member states and businesses, and not just the EU. Strong, lasting growth is the key to getting people back to work and to improving living standards. Those are the outcomes that the public will judge us on, whether we're policymakers, politicians, or investors. We need to create the right business environment in which growth can take hold, to get money back to work, to support the companies and the households that need it, and to fund the much-needed infrastructure that will make it easier to do business across the EU. So that perhaps, in generations from now, people here in Rome and across Europe will look back and will think that after some difficult times, we refocused on the priorities and that we made the right policy choices to restore growth and to restore jobs. Thank you very much.
Thank you very much, Lord Deal. Thank you for this rich, informative, and inspiring and inspired presentation. I can't help picking up on your way of putting your challenges and your agenda in a really long-term perspective, the Roman perspective. And what I get from that is that what is at stake here is not only trade, prosperity, but it's basically a question of culture and the values. And among them, the value of the market economy, your reference repeatedly to the single market. I think this is extremely important for us. We are part of a business organization, civil society organization, so we understand that with this comes not only roles, prerogatives, rights, and I'm sure you'll have many of us, including ourselves, coming to you with concerns, requests, but also, and above all, responsibility. We understand that we have a responsibility, and as President Abete said, we are fully prepared to play our part in a constructive and active partnership with member governments and the Commission. Thank you very much. I think we need to move ahead, and now it's my pleasure to give the chair to Philippe Legren, who is there and ready to take our place. And with him, I would like to call to the podium Mr. Herzog, Mr. Bassanini, and Mr. Scanapieco and Thierry Dehaut for the first session. And Philippe, I am happy to give you the floor.